Good morning, everybody. Hope your evening went well. We've got a lot of news on tap today from the European Central Bank, ranging from what will their actual interest rate be, what will it be on private deposits, to how much debt will they be allowed to purchase from the members, issued debt, members of the EU, especially the pigs nations. So the rate cut rate information's out as of 9 minutes ago at 6:45. I haven't seen the actual announcement. The big event will be when Draghi picks up the mic at 8:30 Eastern. That's when you can just have really huge moves. Once this news is out of the way, then we've got then we'll move on to today's news, which jobless claims at 300. $290 to 300 has been the default position. Productivity minus 2.3%. Unit labor costs plus, this is revised, plus 3.1. Neither one of these will get much play. Factory orders, that's been decreased steadily all week. It's down now to plus 0.2%. First of the week it was plus 0.6%. Natural gas inventories at minus 224. So the natural gas inventories could be higher than that. Factory orders has been revised down. I said if it had come in at 0.6%, you would have guessed that it could come in lower. And jobless claims is all over the map, and I don't think anybody pays a lot of attention to that. So the ECB news conference, and that'll have a lot of impact on what the stock markets and what the stock market does will spill into ours to a point. And then tomorrow's non-farm payroll number, which is forecast at 240K, which would certainly be supportive for stock markets and not for financials. So I think we're going to head lower. I think we're going to test this low right here. And then the market will move into a trading range. So just taking a look at where we are right now at 25, you got this volume structural sell right here at 27 to 31. Picks up this high volume number right here, and it almost takes us to the start of London. And then the backup sell would be new highs. And I don't think we can break the market out because of tomorrow's non-farm payroll number. We're going to put 21s to 17s. It may take a 25 to get into. It depends on what the ECB does. We'll put a question mark at 25, and then 9 to 13 for buy 2. So a lot of news is going to hit the tape this morning, and the market will react accordingly, and the impact of Draghi's statement is probably the major piece of news today. Okay, the knob spread continues to come in, but this feature in the options play yesterday, and this is the second day of the row, is covering liquidation of puts and buy calls. So getting ready for next week's auction would be my guess. Okay, we've made new lows right here, headed a little lower. We'll make 1 to 5 to buy. There'll be some short covering against 158, and then 25 to 29 for buy 2. On the sell side, we have the spill from 17. We're at 11, so 15 to 19. It's very aggressive. And then 23 to 27 for sell 2. And I'm playing on a little bit of a contraction of the knob spread in those numbers. That is an aggressive number. Okay, J.P. Morgan's article that I put up into the room is talking about the euro, the interest rate for cash deposits in the Eurozone. The European Central Bank is going to minus 3% eventually. And the gist of that, the impact of that would be with the euro dollar and the U.S. dollar at parity. So I don't think they make that kind of cut today, but everybody's, you know, QE has not done from 2009, and we've got a 6-year experiment with it, has not reinflated the economies. In a good way, it's made food and energy costs go up, but what they needed to make go up was the price of real estate. That hasn't happened, except for, you know, the hot spots, Paris, New York, London, the major cities. But it hadn't happened in the other places. So you have to ask yourself, why do they keep doing it? And I mean, it's just kind of, they're like one trick pony. That's all they have. And the thing that, one of the things that's really hindering them, if you think of that $5 trillion that has been spent already to date, if they had changed tax policy and changed industrial policy around the globe, which would have decreased the power of bureaucracies and governments, what the world would look like right now, and it's a lot better. So the central banks are really handicapped by the policy of their governments, which is increased regulation, increased rules, more restrictions, not pro-growth. And the reason we're not selling more houses is that people don't have jobs. And how do you create jobs? And how do you increase demand? You increase demand by creating jobs, and nothing that these governments do favors increased jobs or economic growth. So the central banks really have a lot to fight. 5 to 8, sell 1 on gold. 10 to 12, sell 2. And if they don't change their interest rates, if they don't go overboard on their bond purchases, if they keep it to the percentage of each individual's countries of the GDP for the entire EU, probably gold will sell off of that. But we don't know what Draghi's going to say. The speculation about what's coming out of his mouth is covered the gamut the last couple of days. If they lower interest rates, their official interest rates, and I haven't seen the announcement, it doesn't look like they have, based on what gold is doing, then gold can rally. More of that probably will come out of Draghi's press conference. Okay, when we left the euro yesterday, I said I would be inclined to cover euros with the idea that the worst was already in the market, and you'd probably get a little bounce. So I didn't quite make it down to 25, certainly didn't make the buck, but that's a pretty round number, 110 and 25. So they come in just above 25, and they start covering their shorts, and so far we're up to the 73, 75 area. Single print up at 111, so here we are, 111, 90 to 111 will be sell 1, and we'll make 20 to 30, sell 2. And again, this is before Draghi picks up the mic. 10.50 buy 1, and then 20 to 30 buy 2. And we'll come back to that post Draghi. Crude managed to rally again last night. The market, they got stops above 52 and above 25. So our 25 to 50 is sell 1, and 75 to 53 is sell 2. Haven't had a lot of trouble getting to our number 2 levels on this, just like on the bond. The print, the breakout came at 51.25, and we got a B pattern, so we'll make 51.25, 51 even by 1, and then 50.50 by 2. Okay, depending on what Draghi says, really swing the E-mini today. Big picture stuff on the E-mini. Then we have tomorrow's non-farm payrolls. So when we go look at the F1 on the E-mini, you can see that this 85 to 90 area right in here is pretty darn support, and you can see that 21.12 to 18 is pretty good resistance. We've got an inside day right now, and it looks like it's going to try to trade up a bit. So the first buy is going to be in our 95 area plus or minus. Secondary buy will be 90 area plus or minus for buy 2. On the sell side, we're going to give it a little room, 4 to 6. Looks like it's trying to trade high, but that's on the assumption we get down. Put a question mark by 2100, and then 9 to 11 for sell 2. And obviously the number 2 levels make more sense. And we're down to a news announcement, so we'll adjust after we see what Draghi says. But Draghi's remarks can move the euro 1 full point, 100 ticks, sometimes 150 ticks. So, and your entry can be pretty sloppy, and you can still make, a half a point on that. It takes at least 20 minutes to get everything up and posted. I will do that. Draghi speaks in 24 minutes. Later.